And two of the heavily capitalized companies on the Nigerian Stock Exchange announced their first quarter earnings on Wednesday. For the 3-month ended March, Tier 1 lender GT Bank reports a group profit before tax of 50.39 billion naira. That's nearly 20 billion naira more than the figure posted in the same period a year ago. Now, the lender also sees its group net interest income higher from 40.79 billion naira last year, first quarter, to 66.13 billion naira. In the petroleum marketing segment of the market, Total Nigeria posts 4.52 billion naira pre-tax profit in the first quarter of 2017 and 8.46 billion naira revenue. The results were unsatisfactory as FBN Capital says it expects downward revisions to consensus estimates and rates the shares of Total neutral. And yesterday at the NSE, the equities closed lower following major sell-offs in industrial goods stocks. The all-share index shed 0.77% to close at 25,620.94 points. Market capitalization closed at 8.86 trillion naira. Wednesday's loss reduced the month-to-month gain to 0.41% and increased the year-to-date loss to 4.66%. In the meantime, the total volume traded increased by 100.68% to 255.73 million shares valued at 1.67 billion naira and exchanged in 2,845 deals. At the FMDQ OTC market, the unlisted securities index there closed 0.72% up to 603.84. The market cap was at 408.63 billion naira. In all, the volume traded closed at 12,312, valued at 1.42 million naira in 5 deals. And looking at the fixed income market, the bond segment of the market closed on a bearish note, albeit modestly, with average yield expanding 1 basis point to 16.51%. On the other hand, the Treasury bills segment closed on a bullish note, with average yield contracting by 6 basis points to 18.18%. And let's get to the currency market. The Apex Bank sold about $96.37 million in a forward auction and $25 million at the investors and exporters window on Tuesday and on Wednesday. The naira appreciated against the pound and euro to 391 naira 95 kobo and 332 naira 87 kobo each, while it was flat against the dollar at 305 naira 90 kobo. In a parallel market, the naira weakened against the pound and euro to 495 naira and 420 naira each, while it remained unchanged against the dollar at 388 naira. Meanwhile, at the investors and exporters window, the naira weakened to 380 naira 39 kobo to the dollars. Let's talk more on the market. I'm being joined by the head of research at GTI Securities, Chukwuma Anyanwu. Good morning, Chukwuma. Thank you very much for joining us.
It's great to be here. Thanks for having me.
Right. Now, we saw a sudden reversal in the gains recorded on Monday and Tuesday. What pushed the market down yesterday?
Profit-taking activities is a clear indication that we still have largely short-term investors who would rather take 2-3 days gains as soon as they come and sell off as soon as they've realized those profits. So it's largely profit-taking activities, and it is fueled from the fact that on Monday we had a massive growth in the market of, I think, about 2%. And at such, since then, we also had moderate gains in the second trading day. And so it was only natural for the fact that since we have a larger play on short-term investors, they would naturally take sell decisions, to call in the profits realized on those 2 positive days.
Now, looking at the sectoral indices, the losses recorded by Dangote Cement and Better Glass weighed on the industrial goods index. Why did investors dump the shares of Dangote Cement and Better Glass?
Well, we've seen some positive results from some companies in the Q1 numbers, and so I think what we are saying is well, I won't say they are necessarily strategic, because fundamentally I don't think anything shifted from either of those stocks, but it will largely be the fact that people are reacting to results as they come in, and they are skewing their portfolios to positions to where they think there's a prospect for upward movements in price. We saw the recently we saw the release of GT Bank's Q1 result, like you pointed out, also Total. So yes, people are just naturally reacting to results, the earnings season for Q1 as they are released, and people are just taking position in companies. They are turning in good performances.
Now let's look at Dangote Cement specifically, considering the results released by Lafarge earlier in the week. That was on Monday, quite an impressive result. Ordinarily, a lot of people would believe that investors would, of course, look up to Dangote Cement, expecting that a better result is going to come out from that company, and therefore would not really want to go off that shares at the moment.
Yeah, that's the normal thing to do. Also considering the fact that Dangote owns upwards of 80% of the total market of the cement market in Nigeria. That would have ideally been the thing to expect, from the market. But like I told you earlier, we have a larger pool of retail investors who are not keen on long-term position opportunities. They are rather focusing on companies to make gains in the short term. Technically, the right thing to do is for a company like Dangote that has done pretty decently, has been very aggressive with market penetration, and has grown its revenue base, even at a time when the economy was very stressed. It's a natural thing that investors will gravitate more towards a company like Dangote for its long-term enduring strategy. But like I said, we have larger concentration of retail investors, and they are not as sophisticated, as far as taking long-term positions as they should. So now, that's likely what's happening.
Chukwuma, just a quick one before I let you go. GT Bank, you talked about it. What's the facts behind those figures?
Well, we saw them focus a lot more on short-term investments, and I think yields in the short term are quite attractive. They played a lot in the money market space. We also saw some improvements in their bond exposure, and it's also in the shorter end. So yes, we saw those growths being fueled from the high yield environments that we currently are operating in. Interest rates are quite high, and they're taking advantage of it. We also saw moderate improvements in their loan book. So yeah, we are seeing a lot of portfolio rebalancing.
Okay, Chukwuma, thank you very much for your time. Thank you. Chukwuma Anyanwu, Head of Research, GTI Securities. A quick break now. We'll be back shortly.